Welcome to the May 10th, 2021 Advance Report for McGowan Group clients and NetWorthRadio.com listeners. I'm Spencer McGowan, President, McGowan Group, and your financial weatherman, a fast-paced educational tour of the global financial markets. Be sure to subscribe to YouTube McGowan Group. You can share the link with your friends if they're on the finance topic as well. And one of the things we're about to do is the McGowan Group Exceptional Investor Series. This weekly report is the fast-paced tour of the global financial markets. The special editions, the McGowan Group Exceptional Investor Series, is going to cover topics like asset management versus wealth management. Key difference, you actually want a portfolio manager deciding overall allocations. Wealth management involving tax, planning, and estate planning. Those are the key differences we're going to talk about in that episode. And how do you combat long-term inflation? McGowan Group Asset Management, serving clients since 1986. There's a lot of inflation in between 1986 and today. We're going to cover what we've learned about making sure that you benefit from inflation instead of the other way around. This is the Dow Jones Industrial Average, but this time I took 20 years. Matter of fact, we started the Net Worth Radio broadcast 20 years ago in February of '01, and you can see the tech wreck there. You can see the crisis, the low of below 6,500 on the Dow, and then you see this amazing run. Notice the flat period here in 2015. That was frustrating for investors, by the way, 2015, 2016, after this recovery. Notice that you did not permanently exceed the levels of 1999 until 2012. That's a surprising revelation, 12 years of a flat market. And it's not unusual for the market to go through flat periods. This was relatively flat from 2017, and of course, then we went into the pandemic. But look at this. What does this tell us? A technician like Alex Tolene, the prophet, would actually say, hey, we're probably overextended by about 4,000 or 5,000 Dow points, which could be a 10 or 15% setback at some point. Good time to make sure that you're rebuilding the safety reserves, harvesting some of the better performers in the portfolio, and at McGowan Group Asset Management, we're automatically doing that in the managed accounts. Whoa, what's this? Interest rates. That's 20 years worth of interest rates. You can see the Treasury up there, just below 6%. These are cash rates, the white right here. What's that? Well, that's the crisis, and the Fed stayed at near zero for a very, very long time until 2015. That flat period in the Dow, 2015, 2016, that's when the Fed said, oh, we're going to start raising the rates again. And that's what you see right here. Pandemic, then went back to zero. And of course, these yields, the 30-year Treasury and the 10-year Treasury, they're as close to zero as they've ever been in history, with this brief exception in the pandemic. And you can see that downtrend. That probably means you've got two things. You've got inflation coming. We know that from the budget of the Federal Reserve and, of course, the U.S. government. However, before that happens, when you solve the current supply shortage, it's not out of the question that this green and yellow line, the 30-year and the 10-year Treasury, actually go flat to zero or even below, according to Scott Menard at Guggenheim. So, the interest rate cycle still in this trend, wow, and maybe one more downdraft if they solve the current commodity and manufacturing shortages that are happening in the recovery. What's this? This is the price of a 20-year Treasury. The price of a 20-year Treasury, even though it's a safe vehicle, it's not really safe until it gets to be a lot shorter term than 20 years. You can see that here. Boom, what's that? That was this year's rate spike. It put the Vanguard total bond market fixed income strategy at a negative 3% with a yield of only about 2. And this only yields about 2. And you can see it, well, it only yields about 1.4 at some point. But that's the 20-year Treasury. That's a big drop in price, about 12% when the rates started back up. That's duration risk, and I wanted to show it to you graphically. You can see it here also on the price of the 20-year Treasury, spiking in the crisis and then coming back down. So traditional fixed income allocations from a 1 or a 2% yield, not likely to work very well over the next 10 years. What's this? Well, this tells you something about the dollar. The dollar is the white line. The yellow line is oil. They move opposite. It's very clear here. Dollar goes from 120 on the index of other currencies down to a low of about 72. And of course, oil did the exact opposite thing. The green line is actually the pipeline index, energy related, and you can see it peaked in 2014. Here, you've got the low on both of those, and the dollar relatively high at 100 on the dollar index, and it's come back about 10%. The dollar's actually down against the major currencies by double digits so far, and you can see energy moving back up. What is energy? It's maybe your best inflation hedge if you get a good yield, and we're in a supply. But that leads to the question, big question. And clients are asking, I hear, all these headlines out of Washington, when is oil and gas going to be extinct like a dinosaur? Well, let's see what the EIA says. Energy Information Agency. They're agnostic on energy. They do renewables, they track solar, they track wind. So I want to go to those projections. Well, this is renewables. And they show renewables now over 10% of supply, maybe 12%. That includes primarily wind and solar. And hydroelectric, constant because it's hard to build like the Hoover Dam. What's this? Wow, that's the biggest source of supply. That's natural gas, and it doesn't look back. Here, that's petroleum and other liquids. That's 2050. I wanted to get to the punchline. 2050, 30 years from now, these are the best projections on renewables. There's another chart, we'll cover that in a second. Here we go. Where are we in 2050 according to the EIA? Renewables double from 21% of overall supply for electricity generation to 42%. Coal doesn't go completely extinct by this projection, but renewables are making up for what coal is losing right here. I would suggest that trend may be even quicker for coal, but they have this clean coal term. It may preempt that. Natural gas is still 36% of electricity generation. This has it at 40%. There are other estimates at 50% right now, maybe going as low as 36% over the next 30 years. The answer is all of the above. We're energy agnostic. We do have renewables and we plan on increasing those. And of course, we're benefiting from the fact that the energy sector is outperforming all other sectors in the S&P. This is solar right here, renewable energy generation. Solar will be about half. Wind is the green, and it stays fairly constant. I'm surprised at that. But you can see this is a long way to go to replace oil and gas. It'll get cleaner and better, and the answer on good energy policy is all of the above. I'm Spencer McGowan, President, McGowan Group Asset Management. Be sure to come down, meet the team that cares, or schedule your Zoom call for an updated investment plan by the team that cares, McGowan Group Asset Management, McGowan Group Wealth Management. Thank you for tuning in to our YouTube channel. I'm Spencer McGowan, President, McGowan Group, your financial weatherman. We sponsor each week networthradio.com broadcast that has the charts and graphs, many of which you saw today. We also sponsor this YouTube channel. Be sure to subscribe for fast-breaking news, an alert when we post something in a market condition that may have changed. Our goal is to help you as an investor make the right decisions at the right time. And that's part of what this YouTube channel is about, as well as networthradio.com. I am well served with a team of 10 people, including myself. And that team that cares is actually made up of people who devoted to your net profits and your success, as well as excellence in service. If you want an educational experience to follow this up, get to networthradio.com, themcgowangroup.com. Right here, we disclose our net client experience all the way back to 2001. What that includes, the bear market cycles of 02, 08, 2018, and the recoveries through the most recent quarter. That is true education of investors, and exactly how our clients have done, disclosed right here. Further disclosures: value at risk of loss. Yes, investments are going to fluctuate. That's part of the reason for this broadcast, and that can actually work to your advantage. We'll build that into your plan. So I urge you to go to networthradio.com, fill out the preliminary client questionnaire, a free 1-hour brainstorming session by phone or at the Crescent in Dallas, and we will map out a multi-year plan for you and your family that's appropriate. Just because we talk about a security on this broadcast, or any securities, doesn't make it a recommendation for your portfolio until you have that written plan. Thank you for tuning in today, and we'll be back next week as your financial weatherman.